Good morning, traders and investors. My name is 𝗧𝗴𝗀, and I'm the senior strategist for WealthPress. Today is April 26, 2021. It's actually my mom's 72nd birthday. Happy birthday, Mom. All right, let's get into let's get into this week's calendar. Now, this week, the big data is earnings. Earnings on Tesla, Apple, Microsoft, other big cap stocks, and Fed data. First, let me give you an idea of what to expect in terms of Fed data, and then I'll get straight into earnings because I want to talk about Tesla, Apple, and Microsoft. Show you some charts, show you what to expect, and give you the propensity for going higher or lower. Now, today we've got durable goods. Tomorrow we've got consumer confidence. Consumer confidence is going to be very important because it's going to give us an indication of what we can expect heading into the GDP, which is the biggest or the most important report of the quarter, and it's happening on Thursday. Typically, heading into the GDP, we have muted trading action. So don't expect too much market action, especially in light of the fact that we have the FOMC announcement about 12 hours before the GDP. So it's going to be a very interesting week. But by the end of this week, we're going to have a good idea of inflationary pressure, durable good orders. We'll have a good idea of jobless claims, again, and seeing if they can be below 600,000, which would be great. Unemployment data and interest rates. So it's going to be a very interesting and very volatile week. As far as the S&P 500, and again, the big reports you want to keep an eye on are the GDP, the jobless claims, personal income, and FOMC announcement. To a lesser degree, consumer confidence. But I think consumer confidence is going to be really important Tuesday as we head into the GDP. Because remember, 2/3 of retail sales makes up 2/3 of the GDP, and consumer confidence will give us a good indication of what consumers are thinking right now. All right, S&P 500, we are literally at new highs as of Friday. We just can't stop this monster. The liquidity numbers coming into the markets are just huge. What can I say? But in light of all that, we've got earnings, and so far earnings are beating ahead of expectations by a huge margins. We've got financials about 60% done, and they're just crazy good. We're only looking for weaker numbers, I believe. Don't quote me, but I believe the energy sector and consumer discretionary. And I'm kind of mixed on the consumer discretionary as well. So let's look at the three of the biggest stocks that are tapped to report earnings this week. First, we've got Tesla. Tesla is trading above the 50-day moving average. It hit an all-time high of about $900 a share, give or take. Now it's at $720 something, so it's pulled back to the 50-day line. The question is Tesla going to continue moving higher, or is it overdone? Well, let's look at what the estimate expectations say. The latest vibe from Wall Street analysts is that Tesla has a real good chance to top consensus estimates, which means it would go higher. For first quarter of $10.5 billion and earnings per share of 75 cents after factoring in strong first quarter delivery numbers. While Tesla has navigated a myriad of Chinese government PR issues, chip shortages, and further spotlight on its autopilot safety record, given that Texas crash that we had where people were wondering whether it was autopilot or not, the street is now laser focused on gauging the annual trajectory of 2021. The conference call is set for today at 4:30 p.m., and that's going to take some added significance with the news flowing. Again, Tesla over the next few weeks. Watch out for Tesla this week. If the numbers are better than 10.5 billion or earnings per share of 75 cents, there's a good chance Tesla's going to hit 800 pretty soon. But I'm seeing good things for Tesla on my radar ahead, especially with the solar stocks turning higher once again. Next stock that we want to take a look at is Apple. Apple is not doing that great. It's not one of the strongest FANG stocks. As you could see here, it made an all-time high around January 25th, and it's been cooling off. But it's now trading above the 50-day moving average, but I'm not seeing the type of institutional accumulation moving into Apple that I saw a year ago or even 2 years ago. So we got to be really cautious. And FANG stocks right now, outside of NVIDIA and Google, are not doing all, and Facebook are not doing all that great in comparison to how they were doing a year ago. They were leading, now they're lagging behind. But again, I like this trading action on Apple, and I think Apple's going to try to hit all-time highs once again. and then we will see how it goes. So Apple earnings preview. Apple is seen generating revenue of about $77 billion and earnings per share of 98 cents for the first quarter. If the number is below 98 cents, there's a good chance we'll go lower. If the number is above 98 cents, there's a good chance we'll see a rally up to the 140 level. Analysts are watching for indication that the company's strong service sales growth has continued into the second quarter, and the pandemic boost in demand for iPads and Macs has continued. That's what I'm curious about, especially with the 5G sector heating up. I'm curious how Apple is going to do, if people are going to be buying iPads again and so forth. Apple is also expected to increase its dividend payout and boost its buyback allowance, which is huge. After Apple turns the page on this quarter, investors will start looking to analyze how the iPhone 13 launch will factor in on the back half of the year. But that's not, we're not there right now. I want to see I want to see how the numbers are, and I want to see how the iPad and the Mac demand has been. Because if it hasn't been that strong, if the numbers can't outperform 98 cents. And remember, write down these numbers. It's 98 cents for Apple. It's 75 cents for Tesla. But for Apple, it's 98 cents. And if we can beat 98 cents or 77 billion revenue, 98 cents per share, we're looking good. We're looking good. And I think based on what I'm seeing, we're going to outperform that number. And again, Tesla, it's 10.5 billion revenue and earnings per share, 75 cents per share. Last but not least, let's talk about Microsoft. Man, look at this. That stock is really outperforming. Now, Microsoft, consensus estimate for the fiscal, third quarter for Microsoft has remained steady over the past 30 days at $1.76 earnings per share. That's a 25.7% increase from a year ago. Revenue stands at about $40.94 billion, suggesting a growth of about 16.9% from a year ago. According to Microsoft, while we have seen the momentum of this backdrop in the last few quarters, this is what Microsoft is saying. We believe deal flow looks strong heading into the rest of 2021 and 2022. And they're saying that the penetration in cloud transition is only 35% done. So they're looking at a lot more cloud. Business is moving into the cloud. Everything's moving into the cloud. And according to 𝗧𝗶𝗺 Securities, 𝗧𝗶𝗺 Securities is a pretty influential firm as far as Microsoft concerned. They say they're looking for another beat and raise quarter. We strongly believe the tide is shifting in the cloud arms race as Microsoft should deliver 45% Azure growth number this quarter and is clearly taking market share from Amazon. So again, we're looking at $1.76 earnings per share at $40.94 billion in revenue. And technically, out of all of these stocks, the one I really like a lot is Microsoft. Apple, Tesla, I would be cautious, but Microsoft I like. And what I would do is I would wait for it to fill this gap around the 250 area, and then I would move in for the kill on the long side. But I like how it's outperforming. It's a swing high. I like the trend on Microsoft, and it's doing really good, especially in light of the cloud storage. Again, we've got a lot of news this week, big reports, GDP, jobless claims, FOMC, and keep your eye on consumer confidence because it does tend to give us a good indication or an implication of how the GDP will look. Now, folks, before I let you go, I'm excited. I'm excited to talk about one of my trading strategies that has been tracking some of the hottest stocks. And I want everyone to be able to get in on these trades. Folks, Overdrive Profit members have posted gains of 35.29%, 57.14%. How about 84.38% over the past few months alone, each in a matter of days? And as a bonus, traders will get to dabble in a dark pool trades that even seasoned pros know nothing about. Other bonuses include access to training modules and even access to my daily market video. Folks, you've got to check out Overdrive. You've got to check out Overdrive Profits. 35% in a matter of days, 57%, 84%, and these are all actual issue trades. And again, as a bonus, you'll get to dabble in the dark pool trades that even seasoned pros know nothing about. Folks, are you ready to learn how to use this strategy? I hope you are. Overdrive Profits is it right now. You've got to check it out. I'm really excited about it right now. Follow the link below to get more information about overdrive profits. Do it now. And don't miss out on these crazy good trades that last a few days, literally a few days. And as always, make sure to like this video, subscribe to this channel if you're watching on YouTube, and stay ahead of the market if you're the first to be so that you're the first to be notified when we post new videos. And again, check out overdrive profits. You've got to check out these double, triple digit potential gains. They are hot. Overdrive profits is it right now. And you're going to get bonuses. You're going to get trading modules. You've got to check this out. You're even going to get my daily market videos, which give you the hottest stocks. You've got to check out overdrive profits now. Do it now. Do it now before I get wise and take this offer off. Learn all about it and have a great week. Remember, earnings are on tap. Bye, folks. Have a great day.